Hello again, Eric Monroe, financial advisor, employee benefit consultant. I'm back in front of my chart. I just did a video about common characteristics of annuities that is consistent throughout all these different type of annuities. So if you'd like to check that out first, feel free to do that. But we're going to jump in and start talking about some of these different types of annuities. Again, I get a lot of calls and phone calls and conversations about people. They just simply don't understand annuities that well. So I'm hoping, this series of videos will help demystify some of the misinformation out there about annuities and educate you and help you if that's something that you're looking at and you think would fit well in your portfolio. So starting with fixed annuities, this is the most simple and easy to understand of all the annuities. I say it's similar to certificates of deposit, CDs at the bank. The only difference is that annuities are not FDIC insured, but the CDs are bank products. Fixed annuities are insurance products. So FDIC insurance on CDs, no FDIC insurance on fixed annuities. But it's similar in the ways that you might understand it is a fixed interest rate for a fixed period of time. And that's as simple as it gets. So with the fixed annuity, you might be buying a fixed interest rate credited to your annuity every year for 3 years, 5 years, 7 years. Different years give you a different flexibility. You could buy a 3-year, a 5-year, and a 7-year and constantly roll them over. But a fixed annuity is very simple. Again, there are no fees. It's for people looking for a higher interest rate than maybe they can get at the bank. And if you saw my first video, you would know that annuities are tax deferred. So oftentimes the conversation is you have money in a CD, maybe you're earning 1.25%. But actually by the time you end up paying taxes on that interest every year, you actually might have a much lower net rate of return. And the alternative might be for you a fixed annuity, where you also get that guaranteed of the fixed interest rate, no surprises, no fees, but you also get the tax deferral. So if you're getting 1.25% in a fixed annuity, you're getting that 1.25%, and it is compounding for you tax deferred. So there are some tax advantages to using a fixed annuity relative to a bank certificate of deposit. So again, this is good for people that have money that they want that's safe. It is accessible. You typically have 10, maybe 15%, depending on the contract, access to that annuity value every year without a surrender charge. And if you do break the contract, they do charge you a fee. So if you have a 7-year contract and you're 3 years in, they're going to charge you to break that contract and access your money above and beyond the free percentage that they give you, which is, again, typically 10 or 15% of the contract per year. So this money is good for investments that you have that you've already paid tax on, as well as if you want a little bit higher interest rate than maybe you're getting in the bank, but not take advantage of the tax deferral, you can use IRA money. Not typically a great leverage because you already have tax deferral with your IRA. So you're not really getting the tax leverage with your fixed annuity. But if you look at the rates and maybe you think it's advantageous for you, perhaps that could be part of your portfolio. Once the term is up, the insurance company will reset the rate. So if it's a 5-year annuity, you get your interest for 5 years. After 5 years, they're going to reset that rate for you. And it could be for another 5-year contract. It could be for another year. Again, these are things that you need to be aware of, think about, and put in your planning when you make a decision on whether or not this fixed annuity makes sense. Look at the ratings of the company, make sure they're highly rated and secure. And again, go through all those questions, talk about what I'm talking about with your financial advisor. And if you want information in addition to this, I'm happy to send you an annuity guide that will give you more detail. And of course, if you have existing annuities, I'm happy to review those for you as well. But basically, I want to make sure that you've got this information on fixed annuities. And again, I am doing additional videos on variable, structured, indexed, and immediate. So hopefully some interesting information. And please share, comment, and reach out to me if you have any questions. Thank you.